sector spotlight, we want to hit on banks. It's kind of funny, right? Because all the sectors that did well were the ones that no one talked about. So like utilities, healthcare, banks, especially banks beaten down in the last year, and the BKX, tricky there, you're a little dyslexic, was up about 0.9%, but there was no real catalyst. It was just a place for people to put their money. So what do you want to do with the banks today? If you look at JP Morgan and Bank of America, you know, JP Morgan up a 1.5%, Bank of America up over 2%. Would you buy these guys?
I bought some of them yesterday, and if you followed me on the virtual trading floor, you will see they popped up for the first time. I bought Bank of America, I bought JP Morgan. Not excited to buy them because every time I buy them, they don't have any traction. And right now the banks might be like a safety play if money does continue to rotate out of some of the riskier momentum type plays. So it's something to watch. Plus Goldman Sachs held that support. So if you look at JP Morgan first, the chart looks okay. If you take a look here, you know, this was that first time we talked about buying versus support, came back into, you know, resistance, sort of failed, but this is a pretty strong day. So if we can start getting above, I would say 46.02, I might go to a tier 2. But I'm going to probably stay long versus this area. JP Morgan is the leader of this group. It's the one you have to own if you want to be in any banks at all, which they're sort of giving you a little clues that you should be in some, but we need to see if there's any traction moving forward.
So JP Morgan the leader, Bank of America a little bit more risky, but Goldman Sachs, you mentioned, is sort of like the stepsister, the ugly stepsister of all these banks. Especially we heard today that the Department of Justice is on the warpath to investigate bad mortgages, and Goldman Sachs is sort of on the radar. Whether or not it's justified, it's happening. So
mortgages. When did Goldman Sachs do mortgages? Oh, you mean the CMOs, not for the homeowners. Okay.
Right, right. So in terms of, you know, falsifying how good the mortgages are to get investors to buy them, and Goldman Sachs is, you know, #1 on that radar. So in terms of Goldman Sachs, you need to stay away here, though.
Yeah, Goldman Sachs wasn't the one that I bought, and I was just watching it for psychological purposes for the market. Goldman Sachs held this support for now. So if you look at Goldman Sachs here, you will see that, you know, it hasn't been acting well. It's on the lows here, and this is what I was watching to see if it could break. It did not break this, you know, 151 area, but now, you know, technically, if it starts to break above this downtrend, some traders might try and play it for a cash flow trade. So if you're in there and you're looking to add above 153, Goldman Sachs starts to look better and can probably get to 155, 157.
And Scott, as we talk about banks, I got to go to credit cards. I feel like a broken record. Well, we talked about these guys a couple weeks ago when the banks were reporting very good credit card growth and less defaults, and we saw MasterCard report yesterday and really killed it. So MasterCard, Visa, American Express, is there a favorite in that group, and do these make the safer, more interesting play going forward?
Well, in the last 2 weeks or 3 weeks, we talked about buying Visa, we talked about buying MasterCard, and even American Express.
Which is more expensive. But
yes, a little expensive, but it acted well. You know, I want to take a look at how MasterCard acted after earnings on those good numbers, but basically they might be selling some of these good news type of scenarios where they were buying them before. So if you look at MA, you know, there are times and places to buy them. This is when I wanted to buy MA, and this is when we talked about it. This is your nice move into earnings, into a doji close. I would be selling some here, not buying it. As far as Visa, you know, also, you know, we talked about the right place and the right time to buy it, and this was the last time we talked about it after it broke this area. So right now I do think that they're better than the banks because, you know, these credit cards aren't the ones that have the, you know, the foreclosures, that whole robo-signing mess. All they are is, you know, a gatekeeper or providing credit for people to spend money if the economy starts getting better, which it looks like it is. So they're better